Welcome to our live analysis. We're trying to do those lives every week, me and Stuart. I'm gonna wear my jacket because I'm a bit cold. So, as I was saying, live analysis every Wednesday with me or Stuart. Just an attempt to help you as much as we can. So, it's your session, as I keep saying. So, I would really like to see your comments with whatever you need. You need analyzing fundamentally an asset, analyzing technical an asset in a particular time frame. Feel free to stick it on the question box for those that they have attended through the GoToWebinar, or for those that they have attended through our social media. Feel free to stick it below the video, on the comments box below the video. Okay, so I'm gonna do some briefing. I'm gonna do some briefing in regards to what's going on so far today. Okay, just allow me a second. So as I'm not sure whether you're following us, checking our blog and etc. to see what we have posted this morning, but a quick briefing of where we're standing so far today. So as you can see, things have changed. Can you see me? Yeah, you can see just me for the time being. Yes, Jennifer. Okay, a particular asset that you need technical analysis for, in a particular time frame. Please tell me what you need. Okay. Hello, Ali. Hello. So as I was saying, just a quick briefing of where we're standing right now. So we have seen a bit of a change this week on the sentiment, on the moves, and etc. So we have seen that the gold has found some ground, turning to the upside, a very, very sharp rally this week, and the same stance with the stock. So we have seen this rise that we have seen since the mid of October extending for stocks. So stock markets looks to be supported, well supported. I will say we consider that we had disappointing disappointing earnings reports, like from Google. That is a gigantic company, as you already know. But regardless of that, we had seen the stock market being well supported. The only one that was in a bit of a pressure, it was Nasdaq today, but intraday, in the short term, I mean within the day, we've seen a bit of a weighted sentiment on the Nasdaq. But if you check the daily chart, so we're gonna check everything together later on, we can see that it's holding 2 months top. So in regards to the rest of the world, DAX was also up, FTSE was also was down despite the Prime Minister election, Mr. Sunak finally. Also, we had seen yields moving lower, so that's why dollar and the stocks remain a bit on the back foot. So dollar has seen turning from the 113 territory, 113 highs, down to 110. So that takes us back to the beginning of October. So we had a bit of a support in the stocks for the time being. Dollar under pressure. Yields are down, and let's not forget that the banks are still in focus. Tomorrow, this afternoon, we have the Bank of Canada, and tomorrow we have ECB, and still the Fed is on the background as well, with speculations for a slowdown in the Fed's tightening to put some pressure on the dollar, even though it's unlikely to see slowdown in November's meeting, at least. So, okay, so let me check gold. Hello. So I'm gonna share my MT4 as well. And let me enable questions in the GoToWebinar. Adam is here. Hello, Adam. So as I said, Adam, anything you need, just stick it in the question box and I will go through it. Okay. Welcome everyone. Hello Ali. Also Dawoon. Hello. Welcome. So okay. Just checked. So okay, we are good to go. Okay, I'm gonna start with dollar, guys. This is the 4-hour chart, okay? And this is an old descending, actually an old triangle that I had draw like in the mid of October, which, as you can see, can see it was broken since last week. So that was the very first sign of a potential pullback for the dollar. So dollar has been seen to the downside for the second day in a row after breaking that 112 111.60 territory. It was a nice strong support that it satisfied the closure of last week, and also that the latest down fractal over here. So extending lower, second day in a row to the downside, breaking the 50-day moving average over here, which is something that hasn't happened since the beginning of the year. So the 50-day moving average was a very strong and nice support for the dollar for nearly the whole year. So today we have seen breaking it and move it for the time being below that. Of course, we need to wait for the closure today to see whether it will indeed remains below the 50-day moving average. But for the time being, the fact that it has broken significant round levels, key levels such as the 112, 111, and 110 territory is is especially the 110 is quite crucial. So it could uh, it could alert some kind of a sharp correction on the so far rally of dollar, even though, as we can see, momentum remains in the long term remains to the upside. If also we consider that the Fed will proceed with 75 points in November and another 75 in December, so that could provide some floor to the dollar. So over here, let me just start from the daily chart. As I said, you can see that it's holding this 110 territory for the time being. A break of that today, it could open the doors to our previous support level back in August and September. This double fractal, if you can see that turns us down to, just be precise, 1718 territory. So that's it over here, and another one over here. So it could open the doors. A further extension below 110, it could open the doors to 108.50 territory, which is a resistance that we have seen back in July, now turning into support, and 107. Let me be precise, actually, let me put it, okay, 107.47 would be the support, the next support level. So that's just in the medium term. Okay, these are far away, and we need a confirmation that the asset is extending below the 110. So that's a key floor. You see, it retested it quite sharply back in the September, but rebounded quickly the next day. So it is essential to see whether it will today manage to sustain this floor, or whether it's gonna break it. Now, let's turn down to the intraday basis. Let me get rid of this triangle because it was broken. So there's no, we don't need to have this on. And I would like to show you that. Does this remind you of anything? Looks like a rounding top, which is a very bearish pattern. of course it's not confirmed. So that's why I mentioned that we need further extension to the downside in order to confirm um, um, a downtrend. So from a technical perspective, that could be also, that could strengthen the bearish momentum if we confirm a bearish rounding top. However, the fundamentals are coming in contrast with this. So yeah, let's wait and see. So some intraday analysis. That's the 1 hour chart. So a bit of a rebound, a tiny rebound the last few hours before the US Open. Stochastic over here is trying to cross up to exit the oversold territory. However, it lacks of momentum. You can see that there is a doji candle the last hour, not a small body candles in general. So that implies that there is a bit of indecision and also a bit of a lack of a bullish momentum in order to turn the dollar higher for the time being. So what we can see in this 1 hour chart is that still the bears are in control, but there is a bit of a consolidation ahead of the US Open, I guess. So 110 remains, and that latest low at 109.74 remains the very near support territory, even for the in the 1 hour chart. A rebound, okay, and a rebound needs to turn back above 111 in order to imply that we can get back to the high territory of the week. Let me check a bit the charts. The most of you are interested in gold, and yeah, you are absolutely right. I'm gonna simplify it. It's just for demonstration purposes. So I'm gonna try to simplify that. So Adam, feel free to ask anything you want, okay, guys? From the people that attend this from the GoToWebinar, just stick on the question box. Any questions that you have, guys, I'm here to help, okay? So let's do that. Mohammed, gold. Okay, gold was very extremely interesting this week, and over here is something. All these lines that you can see is lines that I have put yesterday on my price action trading webinar, and so these are resistances, support areas. The rectangles, the blue rectangles, are support and resistance areas, and as we can see, it has already broken in the previous 4 hour. So in the European Open, it has already broken a resistance, an immediate resistance that we have seen last week. As you can see, the candle. So let's do, since you mentioned that I had too many indicators, let's do some price action analysis for gold. Okay, let's change it a bit. So, okay, this is a 4 hour chart. We have seen the asset in October, since the end of September, retesting twice the 16. Let me just be precise. 1650 territory. So this is a very strong support level in the medium term for gold. But after it didn't manage, it failed to break it and rebounded quickly, breaking this descending channel that I had and extending to the previous resistance at 116.70 territory. A bit of a pullback, but eventually today managed to break it and to be sustained above it. So the next resistance, as you can see, the next area that has been seen as a resistance, if I check my chart, is the 1680 to 1684 territory. So this is a level that the gold failed to break, as you can see in the mid of September and then mid of October. So was keep retesting it, and failed to break it. So that is our next resistance level, considering um, considering the past performance, but also the the candles. So the last sessions, the last two sessions, I want you to emphasize on the last two candles in this 4-hour chart. You can see, I'm going to zoom in a bit so you can see. So this is the 4-hour candles, okay? So the last two sessions, we had some bullish candles, and not only bullish. You can see, have a look on the tails as well. The below tails, which suggest an attempt from sellers to push the price lower, they are tiny, while the upper tails are quite significant. So that implies the body of the candle and the length of the tail, especially the last session in the European session, is quite big, suggesting that bulls are still in control, and there is an increasing bullish bias. So the fact that this candle closed above our resistance, uh, and considering the body of the candle, implies that there is further steam to the upside. So the next resistance level for gold, guys, is, as I said, back to over here, 1680 to 16, let me just be precise, 1684 territory. That's the next resistance area, if the asset continues extending higher. Okay, so I'm gonna turn into the daily chart so you can see it. No, you cannot see it. Let me just, okay, now it's clearer, I think. Okay. So you can see the body of the candle, you can see how strong it is, the higher highs. So yeah, 1684, a break of that level, then a break of that level could take us back to the 1736. So you mentioned 1725, dear Mohammed. Still, is this support, is this resistance area, it needs to be broken in order to suggest that the asset could turn back to August and October's highs, which is 1736, 17. Let me just be precise. Yeah, 1725 up to 1736, like you suggested, but there is some resistance over here. And if I just use my Fibonacci, even though I said that would be solely a price action, yeah, you see, it didn't broken the 50% Fibonacci level. So yeah, we need more further confirmation for uh, in order to imply that 1725 is feasible. So yeah, closure about 50%, and that resistance is really close to 61.8. So that would be the confirmation for turning back to 1725. Now, Kai is saying 1684. Yes, yes, yes. That's the next resistance area. That's the next resistance area indeed. So some intraday analysis for gold. So let me set my intraday setup now. Actually, I don't want to ruin that, so I'm gonna save it as gold. Okay, so now I'm gonna turn to 5 and 9. So this is the intraday setup. And let's see what's going on over here. Zoom in. So stochastic is turning lower, RSI the same after doing an attempt and extending above 70 is now turning lower. The fast moving averages are flattening, so there is a bit of a ceiling over here for gold intraday in this 1 hour chart. So I'm gonna put my lines on. That would be an area that needs to be broken in order to give me further information on whether we're going to have a pullback or another attempt to the upside. So intraday, the 1675 and 1664, 1666 is our immediate support levels. Because now the gold, the last 3-4 hours, it has entered a consolidation. It was quite obvious because it was overbought, as you can see, 1, 2, 3, 4 consecutive candles outside Bollinger, so it was overbought. So a bit of a correction following the form of a consolidation. So only a break outside this temporary range could give us clues whether the asset for the next few hours it's gonna do a bit of a correction, a bit of a pullback with support at the 20 period moving average, or whether it will keep extending higher. For the time being, stochastic RSI, the flat moving averages and this consolidation suggest that it's gonna continue moving sideways for the next few minutes, hours, who knows. Let's wait and see. Do the moon. Not sure what you mean. Not sure. Euro dollar. Euro dollar, of course. Okay. Euro dollar for it entered again and retesting again the parity levels. Okay, that's the daily chart. I will take step by step doing the daily and going down to the 1 hour as I usually do, Timothy. So it entered again the parity level, as you can see. So found some support on the decisive pressure on dollar, and now that some of the UK politics are not in the picture anymore, even though that doesn't necessarily affect the euro. But yes, so we have a return of parity once again. But as you can see, this is daily chart. It lacks of momentum. Indeed, the MACD over here. Let's start with MACD. Let me ignore actually. Okay, let's clear a bit this mess. Black template. Here it is. That's my daily template. So there is something very, very interesting in euro over here. We have, we have higher lows in MACD, higher lows in the chart as well. Okay, and so that's the proper way to do it. So what we have over here, we have a turn of the medium-term outlook, not the long-term outlook, not the overall outlook for the euro dollar. Okay, just the medium term. We have a change from a bearish outlook into a positive outlook, at least from the technical perspective. That might be because of the ahead of the ECB, but what we can see over here from the technical picture is several bullish signals. So one of them is the breakdown of my nearly 2 months descending triangle, right? So breakout that happened initially happened on Friday, okay, and it keep extending higher so far this week. We have a break above the 50-day moving average, something that hasn't happened since there was an attempt in May, but the price was below the 50-day moving average since February this year. So here we have 2 consecutive days, strong bullish days above the 50-day moving average. So 50-day moving average, which used to be a strong resistance, now it was broken. And another two things actually, is that rising MACD. It is negative, but is posting higher lows, indicating that the bearish pressure is detecting, is decreasing. RSI also turned above 15. It keeps pointing higher. So we have several signals from a technical perspective suggesting that that there is in the medium term a change of the outlook from bullish to bearish. So as I said, it's in parity right now. So the next okay, just give me a second. Okay, perfect. So the next resistance area is at 1009, 1020. The very next one is at 1037. So that's a confluence of 161 Fibonacci level and the high of August, the highest level in August. So 3 resistance areas for euro dollar if it keeps extending higher. Okay, that's the daily chart. So 1009, 1020, and 1037. These are the resistance area, the territories that we can see using the Fibonacci extension along with the high fractals. So you can see the 109 is key level because it used to be a nice support with consecutive down fractals over here turning into resistance right now. 1020 is the September's top, and there is a confluence of August top along with 161 Fibonacci level for the very third resistance area for euro dollar in the medium term. Now let's move on in an intraday basis and the 1 hour chart. Template 5 and 9. Let me use my intraday setup. Are you okay? Are you with me? Timothy, are you with me? Are you okay so far with the euro dollar? Okay, so euro dollar 1 hour chart, and I would like to check the 30 minutes as well. Yep. So we have, after that rally and after being overbought, we have a bit of consolidation, but momentum intraday is bullish. So you can see MACD extending well above zero. RSI holding flat and actually close to the 70 barrier. Stochastic had a pullback, but the slope of it is not too sharp, implying that this consolidation looks to be just a correction. So the bulls remain in control intraday. So this is a 30 minutes chart, but we need to see exiting this range, something similar that we have seen for gold earlier. Okay, so you see flat MAs, flat RSI. So I'm gonna get rid of that. So you can use the latest fractals as your immediate support and resistance level, and on the break of any of those, that could be an indication of whether we're gonna see a strong pullback or whether we see this rally extending higher. Okay, so I didn't forget the guys that have asked about stocks. Here it is, Emma. Emma. Welcome once again. So you mentioned Dow and you mentioned S&P 500, of course. So guys, you need to have, if you like stocks, I mean, if you're trading indices, US indices, stocks, etc., you need to give yourself alert with the earnings season. Okay, this is a gigantic week because we have all the big tech companies reporting. Okay, we have Apple, we have Amazon, Mastercard, Alphabet, which is the Google, uh, Meta, Facebook, Microsoft already reported. So it's a massive week. So by keep yourself up to date with the earnings, you're gonna get an understanding on what's going on in the stock market as well, because there have been some disappointing data indeed in the earnings, such as the Google ones, but there were some positive ones, such as Microsoft ones. So that for the time being, the earnings are providing some kind, this week at least, is providing some kind of a support to the stocks. Okay, so yeah, so what we have over here, I've started with the S&P 500, and well, there are a lot of questions. Give me a second, please. We have seen euro dollar. Why US 100 also correction when index is dollar is down? There is any chance of using going up? Okay, so let's take it step by step. Okay, so they have an inverse correlation, by the way, Georgius. So okay, step by step, let's see together the US 500, otherwise S&P 500. So as I mentioned, the stocks, the US indices have found some kind of a support this week, breaking the latest resistance level that has been seen back in the end of October, beginning of end of September, beginning of October. However, the overall bearish rally, the bearish year outlook for stocks hasn't really changed. But yeah, that's a different story. So I will shift to the weekly chart, just because I want to show you how significant was for you to see. Actually, let me just um, black template. How significant was for you to see the how last week's candle close. Can you see that, guys? So that's a full body candle. So the closure last week, it was a clear sign that some further extension higher will follow, and this is indeed what happened. You can see full body candle with a tiny tail or no tail at all, the upside. So that was a sign that at the end of last week, bulls took the control, and here there is a further extension higher. Overall, as I said, in the long term, in general, the stock markets, the global stock markets are in a bear market. But okay, that's in the long term. So let's focus on what's going on right now. So we have seen the asset breaking yesterday and closing yesterday above October's high. We have been seeing Bollinger's starting slowly to expand higher. However, check the indicators below. So MACD is still negative with the signal line well below zero. RSI is at 50 territory. So there is a lack of confirmation that this rally will continue. So there is a bit of there's not an increase in bullish bias. So this looks to be, for the time being, a limited move. Okay, that's the S&P 500. So there is still this resistance on our 50 exponential moving average, but considering the RSI and MACD, there is a ceiling. Okay, there is a lack of further rally to the upside. Of course, everything will depend on tonight's earnings because we have some giants reporting, as I said. So tonight is Meta, and tomorrow we have Apple and Amazon and Mastercard. So um that could easily change tonight. So we need to keep an eye tonight on what's going on. But for the timing, the momentum remains negative. So okay, so that, and you see how significant that 38.2, 38.21 was. Other than the October's high and the latest up fractal, it was also at the 38.2, and it was precisely the 38.2 Fibonacci level. So a positive, of course, the US Open will open in 2 hours from now. Um, the next resistance is at 1915, 39.15 territory. Okay, and if we gain any positive results from Meta, from Amazon, from Apple, that could lead to the key level, a 30 level in the 4,000 territory. But as I said, for the time being, there is a lack of bullish momentum. So these are the next key resistance levels. Okay, and we need to keep an eye on that 50-day moving average and on the 38.2 Fibonacci level. So that's intraday. So in the daily chart. The daily chart is a bit mixed. Let's move on to the. Okay, here we are. 4-hour chart in this case is quite ideal because it helps us to identify a very an immediate resistance, okay, that could imply the potential retest of 50% Fibonacci level. So is the day's high at the 38.74. Okay, so momentum intraday is strongly positive. Can you see the difference between the daily and the intraday one? Intraday, we have a different scenario. We have a strong bullish outlook with RSI keep pointing higher, MACD well above zero. And if I use my intraday setup as well, we're gonna see how the fast moving average are. Come on, perfect. So, oops. Okay, so here we are, a bit of a correction with the 20 crossing above the 200. So a very different outlook over here. Intraday bullish outlook, while in the medium term there is some limited rally. So that was from USA 500. Let me check again your questions because um, Eric, we have plenty of webinars in regards to for beginners, okay, for newbies. You need to visit our website, go through all the educational material that we have, our webinars. They are recorded, so everything is in the past webinar session section in the website. There are also some other educational videos that you can watch in the website, and a glossary that will help you. So you need to start doing some homework first, okay? In order to start from the basic, it's better. So as I said, dear Jason, the S&P 500 presents a bullish outlook intraday, and it remains in a bearish outlook in the daily chart, unless if we see a confirmed breakout of the 39 territory, 39,000 territory over here. 3950 to be, if the 15 to be more precise, 3915. Someone asked about. Wait, there's so many questions. Wait a minute, because I'm confused now. Um, why USA hand? Okay, yes, this is what you said. Evado, you should know that they have an inverse correlation. If yields are up, okay, dollar is up, stocks are down. If yields are down, dollar is down, stocks are up. There is an inverse correlation. Um, so that's why the correlation, the comparison that you did is it's wrong. So S&P 100, you said, and we have Dow as well. So S&P 100, that's I didn't cover that one. Okay, let's do it now. Was in a sharp decline over here. That's not ideal. Okay. So the key level to the key area, I should say, for USA 100 to be closely watched. Don't forget that Nasdaq is a heavy um, tech heavy index. So it's the one that might be if impacted the most by earnings, okay, um, more than USA, S&P 500 or Dow Jones. It's a tech-heavy asset, so its sentiment was weighted significantly. It tends to weighted significantly from the earnings. So we can see over here that the Nasdaq was outperformed thanks to the drop in treasury rates. Okay, so it has posted for the whole October, if I remember correctly, nearly 8%. Was it 6%? 6%, if I'm not mistaken. 6% rally. 6%, it moved 6% higher. Well, so and currently, so the last 2 days is retesting this area over here. So the October's top, and that takes us back to 20th of September. So this is 11,700 territory is a key resistance area for the asset. But the fact that we have 3 consecutive days of a rally, and that's something that brought the asset back to September's area, is quite significant. However, as long as we don't see the asset turning about the 11,700, then we cannot really suggest that this sharp downtrend has ended. Okay, the asset is in a sharp downtrend since August, broken it on Friday, extending above it since Friday, but still we have this strong resistance area over here. So let me just check the momentum indicators as well. So, clashes with the 38.2 Fibonacci level. Can you see that? And I would like to see the momentum as well. Where is it? Where is it? I want my RSI and I want my MACD as well. Okay, so that's the daily chart. MACD remains below zero. RSI posting higher highs. Okay, perfect. Boom. Okay, so these are things that I can help you. So can you see that I have connected with the trend line, the lows of RSI? So this A cross below the trend line over here in RSI could be an indication that this rally has ended. So if RSI comes below my trend line, okay, coinciding with a pullback in the price, could be an indication that this rally has run out of steam. If we consider, of course, that the momentum is still bearish, and you can see that from MACD, that both the historical lines and the signal line are below zero, and there is not a substantial slope over here. So yeah, everything will depend on the earnings, I guess, in this one, because this is the big giants this week. So yeah, we need to be a bit patient. That's the daily chart. Let's move on to the intraday setup. Okay, perfect. That's the 1 hour chart. Consolidation. It was the word for that represents the moves that we have seen since yesterday night. It didn't manage to fill that gap yet. Can I use the 30 minutes chart? Yes, this is the 30 minute chart. Okay, so just to see where we're standing, actually fill that gap. Continue sideways, small body candles, 11,500. See that at 11,500 bank, you can see the Bollinger's flatten and be narrow, fast moving average be narrow, MACD is at 0, RSI is at 50. So a lot of indecision. That's a bit, I mean, makes sense. How can I set up MT4 in my system? I'm not sure what you mean, Samuel. How you can have these different templates, use different systems, how you can save them. This is what you mean. It's just you put whatever you want, an indication, and just you go and save the template. That's pretty much it. So consolidation, intraday, indecision. Nothing really to be clear over here. So a lot of indecision remains for the intraday setup. And let me zoom out a bit. Done. No. Okay. Yep. Okay. So let's move on. Where we have left it. Dow in a 4-hour chart. No, where is it? It was Emma. Dow in a 4-hour chart. So a sharp rally. Floor, a substantial, significant floor at 30,550. Another one, you will consider 31,000. That's the next one. Immediate resistance at the highs, at yesterday's highs. While a break and a rally above 31,915. And you see that it was retested once, twice, 3 times. Okay, so that is a very key level today, because if we see a candle closing above it, okay, and it should be decisive, then we could say that we're going to have a look at the high territory back in the 9th of September, or so here it is, 32,337, 32,655. But that's a price action analysis. But you know, guys, you see how small body candles we have for the time being. So you need to check the body of the candles. That suggests just a lack of momentum. It's not a significant, it's not a signal at all. So we need decisive candle. We need strong candles, either to the downside, either to the upside, but strong candles in order to give us an indication that, you know what, there is further into the upside, or you know what, it's time for a pullback. So that is a strong, is our key resistance area. We need a decisive break and a closure of the candle above it, Tiarema. Dollar yen. Hello, Dennis. Welcome. So dollar yen. Okay. So dollar yen, 3 days, actually since Friday, it has a pullback. So the thing over here is that we have a bit of a contradictory picture. You can see that we have a pullback, but momentum is so bullishly strong, right? You can see how big these histograms are in my MACD. So what's going on over here? It's a correction, similar to what we have seen over here, similar with what we have seen over here, and so on and so forth, because it has been in a rally for the last nearly 2 years. The 50-day moving average, and I think I have my exponential one. Let me see if the simple list makes more sense. It's pretty much the same. Okay. I had my exponential. Okay. The 50-day moving average remains the floor, remains the trigger point that could suggest that we might have the that we might have a reversal, but this is unlikely. Why? Because of the fundamentals. Fed is by the end of the year is expected to increase rates by 4%. On the flip side, Bank of Japan, it's at negative interest rates. And if they change policy, they won't get any aggressive. So yields differentials. So as this is what is driving the long-term the asset, and that's why we have been to historical highs in the 152 territory. This is a correction. Indeed, it's a correction. Whether it will end, when it will end, so support still is on the 145, which is something that it was retested on Monday. And the very next important support level is the moving average, the 50-day moving average. So 143. If I just use my Fibonacci's from the previous correction up to the latest high, you can see that 50-day moving average coincides with the 38.2 Fibonacci level and with our latest fractal over here. So if the asset continues to extend lower, breaking within the week the 20-day moving average, we could see it turning back to 143. However, it's still, the outlook is still positive. Regardless of these consecutive lows, you can see that it fails to break the 20-day moving average, and it fails to break the 23.6. Even though 23.6 is not any significant retracement level, but it's holding a nice floor over here. So yeah, as long as we don't see a decisive close within the week below that, then this is just a correction before another attempt to the upside, because don't forget that regardless of what's going on intraday, is yields differentials, is rate differentials, is the huge deviation that we have between Bank of Japan and Fed. Bank of Japan is on Friday, by the way, but again, it's unlikely to change their decision. They could suggest, they could change the purchases, the bond purchase program, but it's unlikely to change their interest rate decision. A change in the interest rate decision would be a big surprise because it has been ultra accommodative since ever. I mean, that's their policy. They don't change it. They have a different approach to the market. Yeah, so on the downside, only a break of that level could retest 145 and 143.70, while this looks to be, as I said, even if it breached down to 143, looks to be correction before extending back higher. So that's it. Let's move intraday. 5 and 9, flat, down, flat. So use your latest lows as your support levels and as your trigger levels for a potential entry point. Okay, intraday is stuck a bit, it's a bit sideways, maybe waiting for the US to open, and as long as we don't have a break of this latest low, it might continue consolidation. If we see break of that level, then we might see the asset making another attempt to the downside, retesting Friday's bottom at 145.50 and 146 territory. Momentum intraday is indeed negative. Okay. Pound. Oh, pound's been it's been all over the place this week. Thank God the politics are turning to ease a bit. But I have something interesting. I don't know how many of you have been here last week that we had done a live analysis, but I have put this pitchfork last week. I used this pitchfork, and then when it broke the pitchfork, I connected the one side of the pitchfork with the latest highs, and I have seen that it broke it. So it looks that is changing. There is now a bullish outlook for pound, which turns the attention to the 117 territory and even I will just put the 200 moving average in the 120 122 territory. So it looks that the momentum is changing. Already the MACD it turned positive, even though the signal line is still negative. RSI, I will get rid of the stochastic because this is something that I use intraday. RSI keeps rising, okay, keeps rising. Yeah, and I have the breakout of pitchfork, the breakout of this trend line that I have connected using the edge of the pitchfork and the latest highs. This breakout happened yesterday. So that turns the attention to the latest high back to the 117 territory. So it's pound turns very interesting. Okay. Oh my God, there are a lot of questions. Gold. Okay, guys, I have already covered gold. I'm gonna turn back to gold again. It seems that you haven't been here when I was covering gold. I will do that. Okay, just stay with me because you are too many. I'm trying to cover everything. There are a lot of questions today. So yeah, very interesting gold, a very interesting pound. This is a daily chart. It's a break of my pitchfork, it's a break of my trending line, it's the break of the 50-day moving average, is the RSI keep rising, MACD keep rising and turn positive. So a cross of the signal line positively as well, it will strengthen even more the bullish outlook. 117.20 remains the next resistance area. Well, if it breaks, we could turn our attention to the 200-day moving average, the 120 territory, 122 territory. So 120 and 122. Let me just be precise. Very important levels. So let's do the intraday setup, consolidation. Yes, I've done that before. It seems that there is a lot of consolidation in general on the US crosses ahead of the US Open. So you can use your fractals as your immediate support and resistance levels if you are an intraday trader, because now it's consolidation everywhere. Even though there is a bullish outlook, there is a bullish momentum, but we need a confirmed breakout of the latest high in order to suggest that it will continue to the upside. So ahead of the US Open, you should keep an eye on your latest high and the latest low, because this will give you a potential trigger. Gold. Let's turn back to gold. And I will do again I will show you again the setup that I had yesterday. Why is that? Because it's based solely on the price action. Okay, so let's do it again. So broken my descending channel over here. That is something I broken on Friday. Found the floor at 1637, rebounded, breaking the last week's highs. Okay, let me zoom in. Breaking last week's highs and extending higher. The next resistance, though, is this 61,684 territory. And it's quite crucial, guys, because a break of that resistance, if I zoom out, you can see that this used to be a strong support back in July. With that said, after a sharp fall, it failed to break it and rebounded. Then it retested it again in August, failed, rebounded. It retested again in September, failed, rebounded, and eventually broken it in the mid of September. So this 1684 territory is it used to be a key support turning into a key resistance level right now. So that the fact that we have such decisive candles, okay, yesterday was a dodgy one, but that's just indecision in the support level. Indecision at the support level implies to reversal, so a rebound. It's something that I have covered yesterday on the price action webinar. If you notice indecision at the support level, that implies rebound. If you spot indecision at the resistance level, that implies to a pullback. Okay, so it broken so far 2 weeks resistance. Okay, and that turns to the attention to the 1684 territory. So if I go down to the 4-hour chart, we need to keep an eye into the 1-hour chart. Actually, would be easier. We need to keep an eye in the US session to this territory over here, to the 1674. A break of it could suggest another $6-7 higher, retest of 1681 or even 1684 territory. So keep an eye on this latest high, because if it breaks, that could turn to the resistance area that I have spotted earlier, the 1684. While very, very important is the fact that if we have a break of 1684, then the next ceiling for gold is up to 1725 or even 1736 territory. And earlier I was, when I was discussing with, who was it? It was Mohammed suggested that 1725, and I use my Fibonacci just to confirm some things. And by setting our Fibonacci, we saw, sorry, I should put it in this latest rally. We have saw that today's candle is quite crucial, because if it confirms, or any time this week, if we have a confirmed closure at 50% retracement level, that could easily come up to the area that we mentioned earlier. And so can you see that they are, so we need a closure above above the 50% retracement level. And if not, if it fails to close today above the 50% level, it doesn't necessarily mean pullback, because we need to keep an eye on how the candle will close, whether we have a strong bullish candle. If today's candle close like strong, a lengthy bullish candle, that implies that there is an increasing bullish bias and could turn as high as 1685 or even the 61.8 Fibonacci level. Am I clear in regards to gold, guys? My trend not logging on MT5. Dear, have you opened an account for MT5 or an account for MT4 and you are using the credential for MT5? Just double check. Sometimes it's a bit tricky. If you're still facing problems, please contact our support team. 24/5, they're here to help and they can fix it for you if there is indeed any problem. Considering gold price reach resistance shows a bearish move, but I'm not certain to go short. What is your time frame, Shadrach? I guess you're not in a daily or 1 hour or 4 hour chart. I'm guessing that you are a scalper, you are an intraday basis. No loss confirmed by M pattern. Have I missed that? What is the M pattern? What have I missed, no loss? That one. Bam, bam, bam. Oh, did I miss an M pattern? That looks like a W. Not sure what I mix, no loss. Please advise. I'm very interested on M pattern that you just mentioned. Cannot really see it. But I'm going back to Shadrach. Shadrach, what time frame you're trading? Because the daily, the 4 hour, the 1 hour, for the time being, remain to the high territory of October. So indeed, we have a bit of a correction over here, but the fact that we have small body candles the last few hours holding above this latest bottom suggests indecision at support level. So that is a sign that it found support and it's a bit of a correction before another attempt to the upside. So we need to keep an eye on the 1666 territory as our support and 1674 as our resistance, because a break of 1666 could turn down to further correction, possibly to 1660. Or if we have a rebound, then a break of 1674 could open the doors to a 1684. Shadrach, are you still with us? If yes, please advise. I'm very curious to see what you're seeing. Unless if you are a 15 minutes trader or a 5 minutes trader and you are seeing these ups and downs. Okay, that's a different story. I told you guys, if you want a particular time frame, please write it next to your asset. I want gold in a 5 minute chart. I want gold in a 15 minutes chart, and so on and so forth. So yeah. That's the 30 minutes chart. Flatten. Momentum is positive even in the 30 minutes chart. RSI has slowed down a bit, but it's still above 50. Stochastic is bullishly crossed, suggesting that this is a correction and it's time for a rebound. So, yeah, I think we said a lot about gold. I mean, everyone's asking for gold, and the whole session was for gold. Hopefully, you don't have any further question for gold. No, I'm keep waiting to see what that M pattern. I'm very curious whether you have spotted an M pattern. It would be very interesting if you let me know, please. Was the big movement linked to one particular? Okay, so, well, very good question. Okay, it's okay. They are this is euro. The big moves that we have seen since yesterday and so far today are indeed dominated by the anticipation of ECB. ECB is tomorrow. There are a lot of speculations that they're gonna increase rates, and that's why people are trading on the belief that ECB will report a 75 points increase tomorrow. That's the one thing. The other thing is the decline of dollar. Okay, um, because dollar is facing a big selling pressure that benefited the dollar crosses in general. But also we have ECB tomorrow, so markets are already positioning ahead of ECB tomorrow. Do you get what I mean? That's why we've seen above parity, even though the fundamentals, other than the central bank, the economic data of Europe doesn't really support this. Okay, but nonetheless, the outlook remains, uh, the long-term outlook remains uh, bearish. So it's not something particular, other than the fact that there are a lot of speculations for tomorrow's meeting and what Ms. Lagarde will state tomorrow and how hawkish or dovish will be sounded, and etc. 75 points are expected tomorrow. Another, if I'm mistaken, 50 for December. Okay, so speculations. Um, I think I covered everything other than pound kiwi and pound yen. So let's shift to pound kiwi and pound yen. Pound kiwi. So pound kiwi it is. We had a very interesting cross of 15,200 day moving average 2 weeks ago. Okay. However, the asset held in a range in the whole October. Okay. So let's put this 3 consecutive down fractals are 195.60 and consolidation over here. Momentum is positive. So let me just have a look over here. What's going on? Is it an overall ascending trend since the end of September? But after this cross, and despite this cross, we've seen the 2 moving average flattening a bit. So the lack of direction. So that agrees with the consolidation that we have seen the past month. So mixed to actually positive to neutral outlook in the daily chart. I'm gonna zoom in and check the intraday setup. DR Martin. So this is a strong floor for sure. 3 down fractals and also very close to the 200 day moving average and the bottom line of the Bollinger Band. So that's a very strong support level. However, the momentum is slowly increasing intraday, as you can see, but it faces the key obstacle over here at the round number at 2 territory, 2 level, 2.00. Let me just be, can you see that? 200. Let me zoom in. So yeah, that looks okay. That's interesting. So a flat top, an ascending trend line over here. So everything will depend on whether it will break and close above the 2 level or whether it will cross below this trend line. If it cross below this trend line that I have just put by connecting the lows, then it could turn down to that key support level at the 195.60, while a breakout of the round of this round level of the top of the at the top of the ascending triangle, it could imply to a rally up to 2.30 or even 2.40 territory. So what I have done over here is measure the distance at the base of our triangle. Can you see this triangle? The base of this triangle, and a break above it, confirm closure above it with with further extend higher, it could suggest that the asset could reach 2045 territory. Okay, so but yeah, that's just hypothetical scenarios. It's consolidating to 00 is a key round number resistance territory. With momentum still, even though it's positive, it's still, you see, MACD is a bit narrow, it's a bit flattened. It doesn't suggest a strong bullish control. So yeah, lacks of momentum. Yeah, but that's definitely something very interesting. Let's shift to pound yen. I need analysis on dollar. Okay. Dennis, for a new trader, first of all, I would like to say start in a demo account. Demo account in order to educate yourself first, to try yourself in a demo account, to you find the setup that suits for you in a demo account before actually entering the market and risking your own money. So it's not a matter of what market to start with, but it's a matter of testing first, educating yourself first, trying yourself in a demo, and once you feel confident enough, um, then go live, and you will figure out which market you prefer. It's upon your personality, upon your discretion. To be honest, it's not like an easy market or a not easy market or no. Um, so pound yen is okay. After some consolidation for 2 weeks, we have seen that it broke today. Actually, it's retesting today the 170 territory. With MACD rising, fast moving average also starting pointing higher, a bullish cross of 20 above 50-day moving average, RSI the same, pointing higher. So there is an indication based on the technical analysis that bulls are back in control with with the next immediate resistance at the edge of our Bollingers, so 171.87, while a break of it will mean turning back to historical highs and back to 2014, 2015 territory. But yeah, so still the 17. So you need to keep an eye on the next resistance area. From the technical perspective, as I said, bulls are in control for the time being based on the increasing on the positively configured MACD, on the rising RSI, on the bullish cross of the 20 above the 50-day moving average. So what that's supposed to be, that means that in the short term, the bulls are in control. So in the near term, the bulls are in control. And if I put the 4-hour chart, that's the breakout that I was talking earlier. The breakout of the latest high at 170 territory is It's a bit flat, but it managed to cross above it. So the next resistance area is at 171.87. So what else? What else? What else? Oh, Nolos, you're checking. Nolos is trading in a 15 minutes chart. Oof, that's a fast environment. And you mentioned that you have spotted, no, you saw a double top in the 15 minutes chart. I cannot see that. Ah, wait a minute. Oh, you're referring to this one. This one. Okay, you're in a 15 minutes chart. So let me set my intraday setup, even though you're in a very fast environment. So spotted a 15 minutes chart, a double top over here. Holding a support over here. Stochastic posted a bearish cross earlier. 1657. Oh, sorry, I'm watching something else. Sorry. Gold. You said 15 minutes chart. Broken that latest down fractal just now, and next floor is at 1663. Stochastic posted a bearish cross earlier and keeps pointing lower. RSI just crossed 50 and pointing lower. Very interesting. Even though I cannot see that double top that you mentioned, but indeed it broken that latest down fractal with stochastic and RSI in line with the pullback. Could you do dollar yen 1 hour? Guys, don't worry about it. I have covered everything that you asked. So that recording will stay in the social media and in the GoToWebinar. So yeah, you can watch it again and see all the assets that I have covered. So dollar yen 1 hour consolidating, as you can see, small body candles, doji candles, I will say, for the last 4 sessions. Holding a support at 146.66. Momentum remains negative, even though stochastic shows some kind of a bullish cross, but you see that the slope is quite narrow, and it's coming in contrast with everything else, with MACD, with RSI, with the actual price action. So yeah, consolidation, a break of the floor could open the doors to the next support level, which is down 2 weeks bottom in the 145.55 territory. Shantrak, again, 5 minutes and 30 minutes chart. And you asked before about, what was it? Sorry, I'm lost. You asked about gold. You asked about gold earlier in a 5 and 15 minutes chart. So what did you ask earlier? Price reached the resistance. Shows a bearish move, but I'm not certain to go short. It's okay, please help. I cannot obviously advise what you should do. What we can see in this 5 minutes chart is that, okay, is that it has broken. It has posted a new bottom. It has broken the latest down fractal. It's posted a new bottom with RSI turning lower. So there is some new refreshed bearish pressure in the very, very short time frame, such as 5 and 15 minutes chart for gold. However, so the next resistance support area, so sorry, if this 38.2 breaks, the next support area is down to 1660. 1662 to be more precise, but only if the 1666 breaks, which is our latest 1665 breaks. Okay. Further bearish crosses from stochastic. RSI keeps sloping lower. MACD the same. Yeah. So guys, I'm gonna call it a day. I think I replied to every single one of you. In regards to the guys that said that they are new here. Oh, sorry about that. I missed that. What can I with double Bollinger's on what to? Yes, okay, double Bollinger's. Oh, we have a webinar for it. Okay. So let me just clear a bit this mess. So DR are up. So where is my price? Okay. Yes, you can use double Bollinger's just by changing the deviation. Okay, I don't know for which time frame you are referring to, but yeah, by using double Bollinger's, yeah, I think I need to change the settings though. This is the 1 hour chart. Let me just fix the settings of the Bollinger's. So the 1:2 and the 1 I would put 0.5 in order to suggest, yeah, that looks much better. That will give you extra potential support and resistance levels, the double Bollinger's. We have a webinar about double and triple Bollinger's, which could give you an idea about a new setup for using double Bollinger's. Okay, let's see whether it shows some sufficient signals over here. Up, down, down, down. So if I just use one, that's too close. No, it doesn't satisfy it. So, and 3. Yeah, that looks much better actually. So it tested, it didn't manage to break the first Bollinger, it put back down. Now it's retesting the first Bollinger again. But in any extreme move such as this one, we can see that it was the second Bollinger. So if we consider this scenario over here, it moved down outside the Bollingers, can you see that? And then it continue extending lower, retesting the second Bollinger Band area over here. Okay, yes, double and triple Bollinger Bands area, guys, Bollingers can give you, you need to do some adjustments though on the standard deviation. So using double and triple Bollingers using different standard deviations, but you need to make sure that it satisfy your asset. You see, you need to play with it in order to give you sufficient levels, sufficient trigger levels and support and resistance levels. So it needs to satisfy your price action and the time frame that you are considering. Okay, have a look at we have a past webinar using double and triple Bollingers in combination. Actually, it's a setup that might give you ideas. It might help you using the double and triple Bollingers as well. So if there are no further questions, I'm gonna call it a day, guys. Carl, you're gonna receive the recording. Oh, okay, you said gold. Yeah, as we said earlier, the next resistance area is back to 1684. However, we need a confirmed decisive breakout of the 50-day moving average for the for gold DR car. I have analyzed gold several times today, so you're gonna receive the recording, and you're gonna see the recording also in our social media such as Facebook, YouTube, LinkedIn, Twitter, etc. And you can see all of my analysis on gold. Okay. So, guys, thank you very much. Have a great day ahead. I'm gonna call it a date. Hopefully, I help everyone. Um, Nolos is saying gold waterfall. I guess you're referring to the 5 minutes chart. This is a 5 minutes chart here. So very interesting. 166 just broken. Next floor 160.60. So thank you very much, guys. Have a great day ahead. Take care. It's all about earnings, all about central banks as well. So keep an eye and keep yourself up to date with the calendar. And also, we'll see you again possibly tomorrow. Thank you. Bye bye.